the earnings of the evening, and the one stock that everyone's going to focus on tomorrow morning is going to be Cipla, a bitter pill and quite a shocker in several of those numbers with lots of one-offs coming through. We've got Ekta standing by to decode exactly what's happened. Ekta, take it away.
Well, it was definitely a disappointing quarter for Cipla, and it was really the operational performance which percolated onto the bottom line, which really shocked the street in terms of the reported numbers. But there were a lot of one-offs which came through this time round for Cipla. So, for example, the margins were impacted on account of rationalization in Europe and emerging markets, plus higher R&D expenditure. So, the adjusted margins came in at around 15.8%, but that was still lower than the 16.4% that they did on a year-on-year basis, and versus an estimated around 18% that the street was working with. However, these one-offs are not likely to continue going forward, so that should be a positive. But separately, it didn't sound as though the analysts were convinced really in terms of the guidance which was provided by the management on the conference call. They did say that in terms of the guidance, the base business EBITDA range would be 16 to 18% with R&D expenditure at around 8% of sales, profit which is going to be higher than the top line growth, and top line will be in mid-teen growth with a base business of EBITDA growth of around 15 to 20%, which I think the analysts weren't too convinced with or a little confused with. So I think the street might be disappointed in terms of the lack of clarity in terms of exact guidance for Cipla going forward. Also, it is a 0 to 3 years guidance. It's a medium-term guidance, and it's not specifically for FY17. The positive is, which I'll just get to in a bit, the company has also responded to the US FDA on its Indore facility, where they have outstanding FDA issues or observations, and they are confident on the response, but they can't really say if they will receive a warning letter on that facility or not. But the positives which stood out for Cipla's numbers this time is that the observations at the Invigen facility, which has also received some observations by the US FDA, are closed, so that's a positive. Plus, the domestic growth was quite steady and in fact recovered after multiple quarters of sluggish growth at around 15% on a year-on-year basis.
All right.